At what level would you feel comfortable getting into gold?
It's crazy, some of these gaps that we've had, both to the upside and to the downside. So I just think some of the momentum was broken. I think some of the technicals where if I lose, my downside is limited and I use my stops, right? So I don't want to lose more than 3-5% on a trade. Like I'm not holding something 30, 40, 50% down like some people do.
A market inflection already happened. The S&P topped out earlier in June, while the gold and Bitcoin prices both topped out earlier in the year, with Bitcoin topping out late last year. Both have fallen dramatically from their highs, and this is a very different tone from last year in 2025 when everything was on the uptrend and everything was reaching new all-time highs. Now this year, not only do we not have that, we have the question of whether or not to buy in now and buy the dip, or ride this downward trend even more. Perhaps it's not a good idea to catch a falling knife, and perhaps it's not a good idea to get in on the markets when the Fed is discussing raising interest rates later this year. Is this a repeat of the 2022 crash? We're going to find out with our guest today, Kevin Steuer, managing partner at StockTA.com. He's going to answer all these questions and more. This video is brought to you by and sponsored by Kalshi. It's the largest prediction market in the United States. Unlike a sports book, you're trading peer-to-peer on real-world events, from economic data to political outcomes, and the price moves based on public opinion, not a house. Go to the link in the description down below or scan the QR code here to get started. New users who use my code LIN, L-I-N, can get $10 when they deposit and trade $10. Right now, there's a trade going on about who's going to win the 2026 midterm elections, which is very important for markets and which is something we'll be discussing with Kevin today. Traders are predicting that there's going to be a 40% chance that the Democrats clean sweep both the House and the Senate, whereas there's a 38% chance that the Democrats will hold the House and the Republicans will retain the Senate. If you believe that the Democrats will win both the House and the Senate this coming election in November, well, then a $50 trade can potentially yield $119 if you're right. Stay tuned for Kevin's assessment of the situation. Kevin, welcome to the show. Welcome back. Good to see you again.
Yeah, thank you so much for having me back.
We had a chat right before the camera started rolling. The most interesting thing you told me was that there are signs of deflation. When the entire world is talking about higher inflation expectations, higher inflation to stay, and the Fed's talking about higher inflation and potentially switching to a more hawkish stance, and the entire world's talking about a monetary tightening cycle all around the world, Japan, the ECB, and now possibly the Fed's going to start raising rates. You told me that traders are seeing signs of deflation. Tell us why.
Yeah, so our algorithm picked up right before, I think it was on Friday when Trump announced, or Thursday when Trump announced the peace deal with Iran a couple weeks ago. The strongest signals in our algorithm were UUP, which is the US dollar, and then a deflation ETF that goes by the ticker BNDD. So when I get those signals from my algorithm, that usually means we're kind of going through a little bit of a shift in the market conditions. And on the flip side of it, I always look at the strongest signals and the weakest signals. And the weakest signals were crypto, which has just been getting crushed for a while. Oil was starting to show some weakness, which was interesting because that was before the peace deal was announced. But also the weakest things were the agricultural commodities. So anything that was, veggie, DBA, hard, COM, all those commodities were doing really poorly from a signal standpoint. And then they've continued to trade lower since then. So, if you look at a lot of the inputs for inflation, which is energy, food, all those different things, seems like a lot of that's been taken care of already before Warsh even started. So I'm really interested to see at his next meeting. Like, he talked tough, but if he doesn't need to raise rates because inflation, according to our stuff, looks like it could be slowing, is he going to actually have to raise rates? Is he doing it to prove he's tough, or is he going to kind of follow the data? Like, I know the Fed's usually very reactive and not proactive. So I just think it's going to set us up for an interesting summer heading into the fall.
What is oil signaling right now? A lot of people are using oil as the basis and baseline for inflation expectations at just over $70 a barrel WTI. Is it signaling higher inflation to come, do you think?
No, I think unless we get boots on the ground in Iran, I think oil's peaked for this cycle at least. I think that'll help with the 10-year. I think the 10-year's peaked. So I think if inflation's slowing, I think we could have some sticky growth numbers here too that may not exceed expectations. So I think we could be looking at not saying long term, but I think July could be a little choppy and we could be setting up for, a momentary pause, I think, in this bull market.
Unless we get boots on the ground. So you're saying that unless it escalates dramatically, the situation in Iran, we're not going to get oil spike up again. What if the Strait of Hormuz just stays closed, you think? Which is the status quo for the last 3 months. But yes, what if it just stays that way?
That's a great question. I think if it really does stay closed, then we're going to see issues, but I don't think Iran's going to do that. I'm not a geopolitical expert because I think they're going to want their money from all the funds, and with us just, loosening the sanctions on Iranian oil, I think they're going to want to, push as much oil through to capture as much revenue as possible. So we have the trend level for oil right now at just under $94. So, we have a trading range on it from about $63 to $90. So having the trend above the trading range is really not a great, setup as a trader. So I think oil, all my charts, it's making lower lows. When it does bounce, it's making lower highs. So I just don't see oil rallying here unless there's a drastic change with what's going on in Iran.
Okay. The fact that the S&P is still at 7,300 points, 7,367 now, and I was reading articles about how if you take out the tech stocks, the Mag 7 and the AI related stocks, the S&P is actually flat on the year. Let's assume that's true. Do you think that the S&P is kind of stalling right now ahead of potential Fed rate hikes? In other words, if the Fed does actually turn more hawkish and we start a pivot, will we get a major correction in the style of 2022?
I could see the S&P pausing here, and what I found interesting, again, I load up what are the weakest signals in our algorithm, and Amazon, AVGO, Netflix, MSTR were four of the five weakest signals in the entire stock market. So a lot of that, those make up a big component of both the QQQ and the SPY. So the key level I'm watching here for the SPY is 693. I know that's a little lower from where it is, but if it breaks below that, I think we could have a bigger sell-off.
Wait, let me just pull up a chart here. So you're saying 693
Yep.
for the SPX.
SPY. Sorry, SPY.
SPY. Okay.
Yeah, and that's at 734 right now, give or take.
Right. So you're looking at a downside of how much, I guess?
I don't know the math on that.
690.
Yeah, 693 is our number.
All right. So that means we've got potentially up to 6%. You're looking at so you're not super bearish right now.
No, I'm not super bearish, but I do think we're going to have a little bit of a pullback here, at least for July. I think July is going to be a little tough. I think it's harder to predict longer term, but just with, I think the market was cruising along, then we invaded Iran, and I think that broke a lot of the structures of, you can look at this chart. Like, it's crazy, some of these gaps that we've had, both to the upside and to the downside. So I just think some of the momentum was broken. I think some of the technicals, I think, need a little bit of time to reset. And we were talking a little bit off the air before. I just think this is a really interesting time because I can't remember a time in my lifetime that a president has taken this active of interest in the stock market and has tweeted as much and has brought CEOs to visit foreign countries and invested in companies himself or his family. So I know he has a vested interest in the stock market, but I'm really curious to see, what's going to be the biggest weight on the stock market, the impact. Is it going to be Trump tweeting stuff? Is it going to be the Iran peace deal? Is it still fundamentals? Is it technicals? Like, could be a mix of stuff, but I just think it's going to be really interesting to see where this goes for the next couple of weeks.
Would you be buying at this level?
Not right now. I would rather, I'm still mostly cash, and I have been for a little bit because I really want to see if this, I'm not trying to be pessimistic, but I worry about a possible ramp up of aggression with Iran again, or something else derailing the peace deal, or the Strait of Hormuz closes. And Trump came out during one of his press conferences and they asked him, this doesn't seem like a good peace deal. Why'd you make it? And he basically flat out said, the world was 4 weeks away from running out of oil, and I didn't want a global depression on my watch. So I think Trump's gonna do what he can to keep oil prices low and to keep that oil supply flowing because he knows they got midterms coming up and he's not very popular right now. And if you have gas lines or gas at $125, $150 a barrel, nobody's voting red in November.
And also, if interest rates start going up, Trump said earlier this year, he said he wants house prices to stay high. Now, that's separate from the affordability issue that the government was trying to address this whole time. This is just digressing a little bit. So, yes, there is a housing affordability issue, but then Trump also said he wants house prices for now to stay high because if it goes down, if it crashes, that could have a ripple effect on the economy. So come midterms, we have a few forces at play. What needs to happen, do you think, to the economy, to the markets, for the Republicans to hold the House?
I think you need to keep oil under 85. I think we need, I know some of these reports are manipulated, but I think you need strong job support, strong job numbers. I think you need to get the AI laying people off headlines out of the news. I feel like that's coming a lot, especially for white collar jobs. And, I have no clue, in tech, if people are more Republican or more Democrat, they might be more Democrat, but, people vote with their wallet. And if you're unemployed or you can't afford energy bills that continue to go up, I mean, I think the data center bill I think it's in the House right now, I think is pretty interesting. I think it's interesting that Trump postponed the vote on the Housing Affordability Act, like you were talking about, like that came out this morning that he doesn't want to vote on that. So I don't know what his plan is, and it's kind of hard to follow because I'm not trying to be political here, but he ran on the Doge thing. That lasted not very long. I don't think it made that big an impact. He ran on the tariff thing. That went for a little bit, then got overturned. I have no clue what's going on with that. I think some companies are still in the process of getting refunds. I have no clue what that does to the Treasury's bottom line, how that affects, what Bessent and Warsh are trying to do. Then you had, stuff about Greenland. You had stuff about Cuba, and now you've had Iran. Like it's been kind of very hard to follow because I feel like it's just been very, I would say, sporadic, the focus.
Yeah.
And I think the nuclear deal that they're talking about, trying to bring on more nuclear capacity to help with these data centers, is a good idea, but that's probably a decade out. So how's that going to help people with their power bills, between now and November? Like I think he needs to really manage the messaging really well. And I think he needs to be really focused on whatever he thinks wins can be, because if he keeps chasing stuff that's not going to win, he's not going to have a lot of good headlines between now and November. And, people have a recency bias, and I think he needs to get some wins under his belt between now and, September, October, when people really start campaigning and all that pressure ramps up again.
I'm looking at Kalshi. It's a prediction market. Prediction markets have been historically pretty spot on when it comes to predicting certain political events, like elections in particular. The closer you get to the actual event, the more accurate it tends to be. So we're still a couple months out. But right now, there's a pretty even chance, 39 to 38% chance that the Democrats are going to take both the House and the Senate versus the Democrats take the House and the Republicans keep the Senate. If we have a blue sweep come November for the midterms, what happens to markets, do you think?
Well, I think the first question you have to answer would be Trump. I mean, I could see Trump, and I've said this before, and people think I've lost my mind, but I could see Trump quitting. Like, I feel like,
What do you mean quitting?
just stepping down and being like, hey, JD, take over. Like, I'm done. I tried to drain the swamp. I tried to make America great again. The system wouldn't let me. Like, just go in a complete spin cycle mode of, I tried to do all this stuff and nobody let me do what I wanted to. So now you guys can figure it out. Like, I'm not going to waste my time with this. Like, I could see him not trying to bash his head against the wall for 2 more years if he doesn't have any political support. Because, I mean, he's older. Like, I don't think he needs to prove anything. I'm not saying this as a Trump supporter or anti-Trump. I think he's kind of tried to do what he wanted to, and some of it's worked, some of it hasn't. And I think he could focus on other things. And I just don't see him being a president who's going to be very happy and sit still for 2 years if he knows he doesn't have the House and the Senate. Because can you imagine the amount of tweeting and stuff that'll go on if, he doesn't, he proposes stuff and it doesn't go anywhere where he wants it to go.
That and the fact that I think if we do get a mixed Democrat and Republican House and Senate, potentially we do have a situation where it's going to be harder to pass any spending bills. And so the deficit may actually stop growing for a period of time. That's my theory, which may actually put less pressure on the long end of the bond yield curve. So we could potentially see interest rates rise a little bit slower if we have a mixed Republican and Democrat.
And that kind of
Congress.
changes the equation for Warsh too, right? Because like what he's trying to do and what Trump basically put him in power and told him to do, like it's one thing being able to do what you want to do. It's one thing being able to say what you want to do and then be able to do what you want to do, right? And I think that's part of the problem right now in DC is there's a lot of ideas, but just everything gets stuck. Like everything becomes a debate. Everything becomes, 1,000-page bill. And every time there's a spending limit coming up, every time the funding issue comes up, like you just have gridlock. And it seems like it lasts longer and longer every time. And that's why I could see Trump being like, if I can't even pass a budget, if I can't pass to fund the stuff I want to pass, what am I doing here?
How would you trade the moment we have rate hikes?
I think the market will go down, at least initially. I think it'll be interesting to see how that impacts the dollar, how that impacts some other things. And because I think gold's getting really oversold here. And I don't know if 4,000 is going to hold. But I think you could end up with like gold's due for a bounce if you look at that chart. But I don't know where that bounce is going to be. And with the dollar so strong right now, I think you could have, some other issues coming up.
Yeah.
Both gold for gold and silver.
Gold has erased all of this year's gains and then some. I'm talking about calendar year to date, not, since a year ago. Since a year ago, it's still up a lot. But it's now at the same level it was trading at in November 2025. 4,000 is nothing to scoff at, but the fabled 5,000 is no longer in sight. And actually, it's not at 4,000 anymore. It just broke below its key $4,000 support zone today. When something breaks below a psychologically important level like 4,000 or 4,500 or 5,000, what does that mean to you as a trader?
I mean, those round numbers are definitely important. The key number I had for gold was 47.19, and when it broke that, I knew we were going to at least below 4,000. So I've been out of gold for a while. I've been out of the miners for a while, and I think it's going to take a while for gold to find a base here. And I think in this case, the metal will lead the miners. So I think it'll be a while before the miners kind of get that bounce. Like I think we're going to need gold stabilized first. Same thing with silver. I think you're going to need some stability there before you see the miners start to rebound. I mean, AEM, which is one of my favorite all-time stocks. I've made a lot of money on that.
Which one?
And Agnico Eagle.
Yes.
They bought Kirkland Lake, which I've done really well with. But AEM was one of the weakest signals in my algorithm for a while. And I'm like, to see what some people would argue is the best gold miner to be that weak is not a good sign for the whole sector, in my opinion.
How did you come up with something like 47.19 or 17? I know you have an algorithm, you don't have to reveal your secret sauce, but just generally, what do you look for? How does it work?
Yeah, so I mean, our algorithm measures and maps all the different price movements. We look at EMA, we look at all those technical studies, and Fibonacci is a big part of it. So 47.19 was a big FID number. I think I went out for the last couple of years. I think I went weekly, and then I drew the Fibonacci retracement, and it was pretty clear that's where both major support, major resistance was. And once it broke through that, I just knew gold was going to keep selling off and harder and faster. Like once you hit these certain pivot points that if you hit it and you go up, buying creates more buying, so it goes up faster. But then it's the same way on the flip side is if you break below that pivot point, selling creates more selling. And then that's when you get, people trying to catch a falling knife, or as some people say, escalator up, elevator down. Like that's when you get those situations when you break those key support points, swing points. Like everybody has different terminology for it, but basically if you can spot those price swings and you can learn how to understand the movements and patterns of the charts, once you see those points, it becomes a lot easier to trade. And that's what our software does a really good job doing.
You must have spent years, if not, a good chunk of your career thinking about the strategy that works best for you before you settled on this style of trading. What else did you experiment with, and why do you think that this, approach works better for you than others?
That's a great question. So I've been trading for 15 plus years now, and I've tried every type of trading you could try. I've tried fundamental, I've tried value, anything you could try. Like I've read a million books on trading. I follow different newsletter, different investing gurus. And basically I found that swing trading kind of matches what my personality is. And I figured out a system that works within that swing trading. So it took a lot of time and a lot of trial and error. And trading's not easy. It will never be easy. There's no magic wand you can wave to make gold go up and you can just buy gold miners and everybody's happy. But that's why I like it, because it's such a challenging game, and the options flow has really changed things, especially since COVID. Like the 0-day expiration options, like you get these big OPEX, once a month, twice a month, like those really move markets. So
yeah,
the game's constantly evolving, and I'm always looking at my algorithm to see if I can tweak it to try to make it more accurate, to try to understand kind of the flow of the market. Because if you don't understand how the market's flowing, like you can be, I tell people you can be the greatest fisherman in the world, but if you fish where there's no fish, you're not going to do well. So that's where you gotta learn what your personality is. And I think you got to match that trading style in your system to your personality, because if you're not a patient trader and you're going to be a buy and hold, you're going to lose a lot, because you're going to ride that down wave down. And, humans are, can be irrational human beings, especially with money. And
yeah.
a lot of people are value people. I see them sell right at the bottom. And that's where they get frustrated, because it's like, I just sold the stock, and right after I sold it, it went up 20% the next 2 months.
So I'll come back to the markets, but I'll give you a personal anecdote. And a lot of people ask me, what are you trading right now? And I'm not a professional investor, and I'm not a professional trader. I run a media channel, and I run, the show. That's what I've decided to do with my life. But I did trade quite a bit in my mid-20s and early 20s with my own money. And I just wasn't very good at it. And I decided that I realized I wasn't very good at it because in my earlier 20s, I had a few issues. One, I wasn't patient. Like I would wait for market open. I wait for something to go up. I traded options a lot. I wait for something to go up 15% and then I'd scalp. And so it's just long term, it doesn't work out very well because you lose a lot of money on commissions, and also you're waiting for things that perhaps doesn't come, and then you don't really have a good exit strategy. So that's number one. I didn't have any patience. Number two, I didn't have a defined strategy. So my question to you is how you found your strategy. I never found mine. I never realized what worked for me and what matches my personality, because I didn't really understand what my personality was at the time. I was much younger. And then the third thing was I just had a lot of anxiety waiting for things that are not within my control. So one of the things that I found and realized was that markets move based on whatever factors are, moving markets. It's not David Lin moving markets. And whatever I can't control gives me anxiety. And so I realized, okay, I can just build a business and control that a little bit better versus controlling my positions in the market. And my question to you is, how do you overcome these problems? Because I'm pretty sure other people probably have similar mental blocks as I did when I was much younger. Is how do you overcome the fact that A, you feel a little bit helpless when you can't control what the markets are doing, and number two, you can't have a defined style that works for you. You're just kind of doing whatever you feel like in the day, which is not a strategy. Hope is not a strategy.
No, hope is not a good risk management strategy at all. Well, first off, I'd say good for you for figuring it out and making that pivot because a lot of people don't figure it out till it's too late. I've tried options. I am not a great options trader. I
Yeah.
understand the options. I need to look at the data as part of my process, but I'm not a good options trader. So like I've had to pivot away from that. But for me, I think the big thing is a trading journal. Like every day I have a trading journal and I filled up volumes of them. I have a bookcase behind me that's, I probably got 10 or 15 of them, like basically one for every year. And I take a lot of notes and you got to pay a lot of attention. And I tell people if you've ever played sports or coached sports, you got to do your pregame plan before the game. Like if you're trying to come up with a strategy while the game's going on, you're probably not going to win that game. So it's a lot of work behind the scenes. And people say, "Oh, what do you do?" And I say, "Oh, I trade." And they're like, "Oh, you stuck at your computer screen all day." No, I do a lot of my work before and after the market opens. Like I can't control the flow of the market during the day, but I need to do, my pregame work before the game starts, and then I need to do a postgame analysis after the game ends. So I think having that strategy, having rules, like I try to make asymmetric bets where if I lose, my downside is limited and I use my stops, right? So I don't want to lose more than 3, 5% on a trade. Like I'm not holding something 30, 40, 50% down like some people do. But then to the upside, I try to buy in groups and then, or I've heard some people say tranches, like I think that's overcomplicating it, but I'll start a quarter position, then I'll add to it, and then I'll, systematically add to it. And then if it runs up and starts hitting where my goals were of that trade, I start to take some off the table. So it's both minimizing your losses, but then selling enough that you recoup your capital to go on to the next play, but then leaving enough chips on the table that if something does run up, you can enjoy that upside. Because it's not only, people think about batting average, like, oh, if you win 50% of your trades, you're a great trader. That's fine. But if you win 50% of your trades and you only make 2%, but you lose your other 50% and you lose 10% on those trades, you're down.
Yeah.
So it's both batting average and slugging percentage, if that makes sense. So like you need to hit singles and doubles, but like you need to hit home runs too, because that gives you more flexibility if you do make a mistake.
The other problem that I had, and a lot of people currently do have, other people, is lack of proper risk management. How do you approach this?
Yeah, that's where I think my system helps a lot. Like I set my stops right below. So we use a confluence system, and that's basically a fancy term for where things meet. And basically, we look for those pivot points with the trades. And if we have something as a high confluence and that's a high support number, I put my stop below that. And if it breaks below support, I just get out of the trade. There's no emotion to it. It's just the ticker. Like I either win, I lose, I learn from it, and I move on. And same thing to the upside. If I see something's got heavy overhead resistance to it, I know it's not going to break through that. Then I start to take chips off the table because that trade's probably not going to work. So it's really about finding those support resistance levels and then maximizing on those trades once you can get those asymmetric bets.
Okay, going back to the charts, I want to finish off on gold and then go back to some other asset classes like Bitcoin. That's also been falling a lot. So gold, below 4,000, we left off here. What would you do with gold below 4,000?
I wouldn't be a buyer here. I'm pulling up on my screen. I would not touch it here personally. I think it's making lower lows. So I think you could see this continue to go down. I don't know where that number is going to be yet. I mean, I could see 3,800 potentially holding, like 3,811 is our next fib number. So that could be support. But even then, if it bounces, I'd wait to see gold making a series of higher highs before I put any chips on the table, in my opinion.
I've noticed a kind of a trend here. You've been mostly in cash. You're not super bearish in the stock market, the SPY, but you're also not buying in at current levels. Same thing with gold. I have a feeling you might say the same thing with Bitcoin, but we'll get to that in just a minute. Why is that right now? Are you just are the charts just telling you to stay out because there's more volatility ahead, or is it just not certain where the swing is going to be immediately, and so therefore it's safer to stay out?
Little bit of both, to be honest. So I don't like some of the signals that have been coming in. I
Okay.
want to see some more certainty with the Iran US situation because that'll impact oil rates, all those things that have been weighing on the market. Another part of it is selfishly, I'm going on vacation for the next 10 days and
Okay.
I'm going to the beach and I just want to be able to enjoy the time at the beach with my family. And I try
You
to
don't
take some
trade on
time
the
away from,
beach?
no,
You don't
I
you
try
don't
not to anymore.
okay.
Like it's mentally, it's nice to have that break and that reset. And,
Hmm.
I'll check a little bit of the markets after the close just to kind of have a little bit of pulse on it, but I'm not going to be studying, the charts and the price
That's
structures and the
actually a
volume.
good point. How do swing traders like yourself or even momentum traders who depend on uh, being active and not just buying and hold, how do you take a break? How do you go on vacation? Because presumably your system requires you to stay active all the time, right?
Well, I put stops in, and if I have stuff that's up and it's winning, you can put a trailing stop in, and if the market
Hmm.
pulls back, you get out of it and you lock in a gain. So that's one way I use it. Another way is, the algorithm always runs like it's automated, so I can check
Hmm.
it at any point. And the harder part, to be honest, is once I get back from vacation, I got to go back through and fill in days on my trading journal and figure some stuff out. So it's nice to have the break, but it is kind of hard to get back into the flow. And it'll take me a couple of days to kind of get back up to speed. But I think mentally it's important as a trader. Like if you try to do this, for 12 straight months out of the year, you're going to lose your mind. It's just too hard a game.
So at what level would you feel comfortable getting into gold?
I mean, looking at this chart, I really hope 3,800 holds because if not, I think you could start seeing like if you look across that chart, like it's just under 3,400 was like a quadruple top for gold for a while. Like if you
Yeah.
get below that and you see how it gapped up there too to the
Hmm.
right in September, you see how it was kind of a nope, back down to the left. There's a little gap in between. Keep going down, keep going down. Right there. You see how it was a
Yeah.
little quadruple top across and
Okay.
then it had to gap up to get over that hump.
Okay.
You know, as a chartist, like
I see.
when you lose support in something that was heavy support, that usually becomes heavy resistance. So if that's
Hmm.
34.28, like I'm hoping gold doesn't get there because if it does, I'd have serious concerns about, kind of longer term this gold bull market. Like copper looks a lot better right now, but a lot of the
Hmm.
metals, palladium, platinum, silver, all look terrible. And I didn't
And I
think
just want
gold
to
was going to do well this year, and that's why I got out a lot of it. But I didn't think it was going to be this quick a pullback on the downside, to be honest.
the only time in which I've seen gold go much higher from a major rally was in 2020. If you take a look at the two prior structural bull markets, there was a multi-year, almost decade-long bull market coming off the lows in 2000, peaking in 2011. That didn't hold for much longer.
Nope.
Collapsed in 2012. Same thing with the 70s and early 80s. Peaked in 1980, collapsed by 1981.
And that's my worry here is does gold actually have staying power? Because
Yeah.
that's where, it could get interesting for a lot of these miners. I mean, a lot of them have been smart when they put out their PEAs and different stuff like they use 2,500 as their base price for gold. So even if gold stabilizes at 3,800 or 3,500, they're still going to be pretty economical. But you've seen some of these, especially kind of these last miners that I've had a chance to run. Like I've seen some of them start using 3,500 as their base economic case, and I'm like, ooh, that could be tough if gold at 3,800 and your IRR at 3,500 is not that great. Like that's where I could see a little bit of worry is because once some of these smaller companies start going, that could be, I don't think this will happen. I'm hoping it's not happening, but I think in probabilities, and that's just something you got to kind of, you just got to account for it in your head when you're playing, a different commodity, whether it's gold, silver, like that's why I like to play kind of the bigger gold or silver companies that have a bigger moat or the royalty companies, just because you just know financially they're going to be a little more sound than some of the riskier plays.
Finally, let's touch on Bitcoin. I think a similar comment could be made. If I can just start with my own observation here, below 60,000 is a key psychological support zone. We've got Bitcoin trading at the lowest level since September 2024. Not even this year, not even last year. It's wiped out gains from the last almost 2 years, Kevin. And Bitcoin has done similar things before. It's peaked and then come back 50%. It already did retrace 50%. So my question is whether or not this is the end of this retracement, as history has shown, or just the beginning. Because if you take a look at just this chart in front of me, in the last 2 bull cycles, it's had a habit of troughing around the same time or around the same level that the previous bull cycle peaked at. In other words, if you take a look at 2011, for example, it peaked at 69,000 actually, and then it went back down to 17,000. 17,000 was the peak around the 2017, 2018 bull cycle. And now we're at a situation where it went up to 120. It's going down and barely holding the last peak from the last bull cycle, which is around 60,000 to 70,000. So what happens next? What do you think?
I'm going to wait a little bit, me personally, before I try to trade this. My worry is 2 things. The quantitative or quantum computing, that's been a lot more in the news lately about them being able to decipher the code, and then Bitcoin doesn't have a lot of value. But my other worry is a lot of Bitcoin is owned by a lot of these whales, and like MSTR, like when they use leverage to buy all that Bitcoin, it was great. But now on the other side, like, what was it? Was it Binance who blew up? What was that crypto firm that blew up a couple years ago with Sam Bankman-Fried there?
FTX.
FTX. Like, I hope MSTR doesn't turn into another FTX. Like, if they can't stay liquid enough, if they have to, if all that leverage comes back to bite them, then I think the low is not in for Bitcoin yet. But I'm going to wait another month just to kind of see where this goes. I mean, I have.
What are you waiting for?
Just the general markets to stabilize. Like, Bitcoin's usually been, for the past couple of years, kind of been a leading indicator for tech, and it's kind of broken out before tech. So the fact that it's sold off this, like, if you look at the IGV chart and you look at Bitcoin, they're pretty similar. So I'm curious to see if, see what I mean?
Yeah.
So I'm kind of waiting to see both with tech. Like, I think once we see a bottom in tech, that'll be hopefully where the bottom in Bitcoin is, if that makes sense. So I'm watching QQQ and IGV a little more closely because I look for correlations when I trade, and usually when those bottoms are in, that's usually when I have a little more certainty around if the bottom's in for Bitcoin or not. And I think what's going to be interesting too is all this money Iran's supposedly getting, these billions of dollars or hundreds of billions of dollars. I'm really curious where they're going to put that money. Like, I think a lot of it's probably going to go into gold, so people can't confiscate it or sanction it or whatever. But I wouldn't be surprised if some of that got recycled into Bitcoin or ETH or whatever. So I think that's just something, again, as I think in probabilities of stuff, like, that's just an outcome I think you need to keep in mind, because, Trump says, oh, they're going to buy agricultural products with it. I don't think Iran's going to be wanting to do any business with the United States after this. So they're going to have to put their money somewhere. Maybe that's into China, maybe that's into Bitcoin, maybe it's into gold. I have no clue. But I think how the outcome of this war ends and how these sanctions end up and how quickly this frozen money gets released, I think will have a big part into probably where the bottom for gold and Bitcoin could be.
Could you speculate as to what the bottom could be, just based on technicals?
I mean, I'm hoping it's pretty close to here. I don't disagree with your point about how the previous cycle, there's definitely patterns to it. I mean, I think it's due for a bounce here. Like, it's definitely oversold. Like, the RSI is at 29. It's on the lower end of my trading range. So I think Bitcoin could bounce here. I could see a bounce to just under 63,000 in the next week or two. But For me, it's kind of similar to gold. Like I want to see 3 or 4 days of it making higher highs and higher lows. Like I don't try to overcomplicate the technical analysis too much. So I think, there's nothing more bullish than a stock setting a new trend where it's making higher highs and higher lows. And I'm not saying I need it to make a new all-time high before I get back in, but I don't want to catch a falling knife here. Like I think it's due for a bounce, but I don't think that bounce is going to be high enough to make the risk reward here a good trade in the short term, in my opinion.
Because the macro just isn't conducive to risk assets bouncing much higher, you think?
Yeah, like I said, I think the next month is going to be a little tricky, and
Hmm.
that's where I'm trying to be patient and try to save a lot of my cash here because I think there's going to be some great opportunity on the other side of this. But
Yeah.
you know, a lot of people right after COVID, everybody was buying gold, and gold did well. But if you bought oil, you did even better.
Yeah.
So there's always that opportunity cost to any trade, and that's where I kind of wait and try to let the dust settle a little bit because if you can have some more clarity in that, you can, try to find the right winner. Like it could be uh AI power stocks, like those have done really well.
Hmm.
Could be chip stocks. Like I kind of want to find what those, leading sectors are or subsectors in the market and then bet on
Yeah.
those horses because they're going to run farther and faster than something that just may have a counter trend bounce.
I'll end on this note. I want to get your sentiment overall as a trader this year versus last year. So, if you take a look at this chart, IGV and Bitcoin both troughed around 2023, and then between 2023 and 2025, I started the show in 2023. So, I remembered the start of my new channel up until 2025. It's just been a steady ride upwards for pretty much everything. And I remember 2025 was a historical year because that was the first year that I can remember in a long, long time when pretty much every single major asset class reached new highs. Stocks, I'm talking about the S&P and NASDAQ and the Dow, Bitcoin and gold and copper, oil stayed low, but that was the exception. So it was a euphoric time, and traders were just talking about new highs every single day. Now we have a situation where we have a war going on, actually multiple wars going on in the world. We have higher inflation expectations baked in. Oil is higher, which you talked about. And now we're talking about a Fed hiking cycle. So a dramatic 180 pivot from last year. And things are not at all-time highs. Gold's come down, Bitcoin's come down. The S&P is showing weakness in the periphery outside of tech and AI. So while last year the conversation was everything's at an all-time high, what do you do? This year the conversation is, well, nothing's really at an all-time high anymore except for copper and a few other things. What do you do? So how does your sentiment this year differ from last year?
I think last year was a lot easier to trade. And to be honest, this year's been very frustrating. And I came out of the gates really strong. I was up, I think, about 30% ish going into March. And I was like, I'm going to crush it this year. This is going to be a great year. Like, this will be one of my best trading years ever. And then this Iran nonsense started and it just totally derailed everything. So there's always a bull market somewhere, right? Like, you can always find some sector to trade. And that's where I think my algorithm does a good job. Like, I can jump in between different sectors. Like, I'm not just an only gold bull or an only Bitcoin bull. Like, I jump in and out and I try to catch that momentum. So I think there's opportunity. I think the market will, from here through the end of the year, I'm hoping it still finishes up. It just, I think you're going to have to work harder if you're going to outperform the market this year. Like, I don't think it's going to be as easy as, oh, just buy a couple AI stocks and you can go to the beach for 6 months and come back and everything's going to be at all-time highs. Like, I think you're going to have to grind between now and the end of the year.
I asked this because I thought traders like more volatility, which is what we got this year.
I do, but it's a lot easier when everything's just going up. And a lot of things were going up, and then you had Trump tweeting and the market just totally doing complete 180s. Like, from, he would say something's great and the market would go up. He would say, it's really interesting to see the influence he has in the market. And I think volatility is great if you're a day trader. I'm not a day trader, so I like to see, like I said before, like just a simple series of higher highs and higher lows. That's really easy for me to trade. When you have different signals within the same 2 week time frame, that's when it becomes really hard. And it gets really hard when you have all this macro stuff going on to kind of separate the signal from the noise, if that makes sense. So I think that's where, when you have too much volatility, that's where it gets really hard to trade. And that's where trying to stay within your system, trying to stay patient, that's where it really pays off, because once everybody piles into stuff, that's when I start to get worried. Like all of a sudden, everybody's talking about, oh, Trump's going to take stakes in drone companies, and drone companies flew and nothing really happened. And then 2 weeks later, a lot of the drone companies sold off. Now, some of them did get contracts and they did really well, but it just, I think in this kind of market, I think you got to be really careful chasing headlines, because if the technicals and fundamentals don't match it, you're probably, as a retail trader, you're probably just exit liquidity. And I said that a couple of weeks ago when I went on a podcast and they asked me about SpaceX, and I said, it might be fine over time, but in the short term, it feels like, retail's exit liquidity here. And SpaceX is down 28% from its peak 2 days after it IPO'd. So I see a lot of retail people who are stuck bag holding there, and they may not be a month from now, but I wasn't chasing SpaceX right out of the gate. And I want to kind of see how it trades for a month or two before I jump into that. And a lot of people don't have that kind of patience. And that's what I think makes it really, really tough.
I have SpaceX, and IGV was just overlaid by default. But this is, let me just end on this note. SpaceX is down. I think a lot of people were actually tweeting and posting on social media at $200, get out. Turns out they were right. But huge run up from 135 to 200. Elon made the most amount of money in a single day in human history, then lost the most amount of money in a week in human history. But the point is, SpaceX's decline perfectly mirrors IGV's. It's not a SpaceX specific story. The entire tech sector followed a similar sell-off following the 16th of June. So something could be said there about the entire market. Let's talk more about tech and SpaceX next time. And I want to get your take on how to decipher noise from actual signal, which you mentioned. So which of Trump's tweets do you pay attention to, if at all, is kind of where I'm going with. But we'll save that for another conversation. Thank you so much, Kevin. Where can we learn more from you?
Yeah, just check us out, www.stockta.com. We're totally free. You can create an account, use all our premium tools. And we also have a YouTube channel with some how-to videos if you're not sure how to use the website. But thank you so much for having me on, and I look forward to connecting with your users.
And thanks for watching. Don't forget to like and subscribe, and use my code LIN, L-I-N, when you sign up to Kalshi. New users who use my code can get $10 when you trade $10. Link down below or scan the QR code here.